Time now for Financial Friday on WOMI with your host, Drew Watson, sponsored by Align Wealth Management.
Using gas to heat our homes, cook our meals, or dry our clothes can be dangerous to our health, especially for kids. But we have the technology to transition the country's infrastructure to clean energy. By encouraging local government and state agencies to electrify buildings instead of using dirty gas, we can clean up a public health crisis in our housing and protect the climate. My name is Matt Vespa. I'm a senior attorney at Earth Justice, and I'm going to court to fight for clean energy. Until safe, affordable clean energy is an option in every home, I will never rest.
Earth Justice is a national legal nonprofit defending the environment and people's health. Earth Justice is fighting to save lives, protect our climate, and strengthen our economy through the shift to zero emissions. If clean air matters to you, visit us at earthjustice.org. Earth Justice, because the earth needs a good lawyer.
Welcome back to Shaped by Faith. Amy Cavell, coach, motivational speaker. We're talking about her book, Small Hinges Move Big Doors. I love that title, and I love the way you explained it, Amy. So how is your book relevant in today's society?
People are really looking for ways to reconnect with each other after all these years of isolation and fear, and it's just simple ways to find joy and build the community again, and these are things that I have learned that have been passed down through generations, and I put it in a book. And I honestly thought everybody knew the stuff that I put in the book. I thought it was common knowledge, but I'm learning our society does not have that common knowledge to know how to host a dinner anymore and how that connects the community, or how to talk and listen well, because now we're all texting and there's no more sitting in front of each other and communicating. And so I really like that my book is a simple way to find joy, build community, and it's helped to design it around your home, whether you're a Christian or not, because each chapter has like a helpful hint for daily life that is not Bible-based, but comes from my life coaching experience. So that's the nice blend between the life coaching aspect and the biblical, is that every chapter has a life coaching Amy Hinch hack is what I call them.
I like that.
And then it has a journal section. So people who are really like into drawing and writing and getting into it have a place for that to kind of unpack what I've shared with them. Mm-hmm. And then there's God's word there. So it really ties in all aspects of what's going to help you to really get the big doors moving.
Okay, is there any subject currently trending in the news, because there's a lot trending, that relates to your book?
Oh my gosh, right? This attitude of, I don't need anyone. I don't need anyone. I can do this on my own. But I think you and I both can agree after talking and listening and seeing what's going on here that these stressful times of facing war, inflation, media, the diverse in politics, and like the invasion of technology that's in our lives right now, that we need to put the cell phones down and start talking at the table and learning how to do life together. Because honestly, if technology would go down right now, there'd be a ton of people that would not know how to connect and communicate anymore.
That is so true. My husband and I were just talking about that the other day. And, we were talking about back in the day when they didn't have all that, or even when I was growing up as a child, we didn't have the cell phone or anything like that. And we worked harder. I mean, we had to figure it out. Mm-hmm. So what makes your book different from the other books like it?
It really is that combination of my life coaching skills mixed with the Bible study and like leaving the leader with a can-do list of creative activities that will immediately begin to create more joy in their life. And it being a Christian living guide, it's not a self-help book though. Okay. That's really important because only through faith and hope and the good news of Jesus Christ can you really begin to help yourself.
Mm-hmm.
That's important because I've had some people, you're writing a self-help book. No, definitely not.
Yes. And I think that book's already been written and it is the word of the Lord.
That's right. It's called the living word for a reason.
That's right. So what do you want your readers to take away from your book?
I just want readers to feel how small, simple, and even like fun changes in the routines can make a huge impact on how they're feeling in their lives and in their homes.
Mm. So how did you learn about all this topic? And I know it's from personal experience, but you have to have more than personal experience.
Oh, definitely. First, I learned from the women and teens that I did ministry with all these years. You know, I'm a good listener, and I know that you can learn a lot from other people. So I learned a lot from these intimate times around the kitchen table, on my floor with teens talking. I learned a lot from them. Also being a pastor's wife and going through the trauma of losing my dad I think he's been gone now for 8 years. You know, it was sudden, and trying to learn how to handle losing your dad suddenly, being a pastor's wife, you know, all of that really inspired me to want to go and learn more about how to understand your emotions. And so I went through training on how to understand your emotions through a counseling center and trained up there, went to the Health Coach Institute because I really cared about understanding health and life, wellness, and really understanding that stuff better. So I went there. And I also think, you know, with speaking engagements and hosting groups and planning conferences and retreats, you know, having a musical theater background was also really helpful because it's all about communication. Successful people are good communicators. And so having that background has really helped me succeed in what I'm doing and how I talk and communicate God's word.
And you know, it's all in your background helps you for sure, but God's placed it in you, in your DNA, how you present him to other people, how you carry yourself, the confidence. It's not arrogance. It's that confidence from the Lord. And it's knowing who you are in Christ Jesus, in the way that you carry yourself. And people are drawn to that. I mean, they may not know what it is, you know, if they're not a follower of Christ, but it will draw them in, and then you'll have time to listen to them to explain. Yeah. Is there a particular passage from your book you'd like us to utilize? And if so, what is it?
Oh, I love this one. It says that hinges only go one way. What happens when you try to push or force a door the wrong way? It won't open. You run into the door. You feel stuck or complacent. Strength, a singular person's intensity or feeling or belief. It's not enough to move the door either. We need a bigger strength than our own. No matter how strong we are, life is going to be filled with stressful and difficult circumstances. We need God's strength to handle it. We don't have to feel like we have it all together. So ladies, read that again. Now say that out loud 5 times. I don't have to have it all together.
Mm-hmm. That is so good. I wish we had more time. Amy, you're going to have to come back on as a guest. So what's your social media contact information?
Oh, for sure. Check me out at, we are at amycavell.com. And then I'm also Amy Cavell on Facebook and Amy Cavell Instagram. And those are great places to find my information and reconnect with me.
Thank you so much, Amy. You've been so inspiring today. I mean, I'm motivated. I am motivated.
Aww, thank you.
Absolutely. And thank you for listening. I'm Teresa Rowe. Everyone have a blessed day. Bye.
Thank you for listening to Shaped by Faith with Teresa Rowe. Remember to visit shapedbyfaith.com to find out more about workouts, the TV show, podcasts, blogs, Shaped by Faith products, and much more.
From the Cabinet Doors and More studio, this is WOMI Owensboro, 99.1 FM and 1490 AM.
The following program is paid for by Rainmaker Incorporated.
Hello and welcome to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and boy, do we have a great show for you on May 19th, 2023. In this part of the country, we've been lucky enough to have what I would call Chamber of Commerce type weather this week with the sun shining, some light showers, etc. And the markets are looking to break a 2-week losing streak, and things have been led by the tech-heavy NASDAQ. And one of the bellwether stocks of the NASDAQ, old Uncle NVIDIA, was up about $15 yesterday, muscling well above the $300 per share threshold. And stocks in general were in the green across the board, as I think more and more people are hopeful that a debt ceiling default, miss does not happen. Now, the item that hasn't fared well this week has been gold. Gold's having its worst run since February. It went out around the 1957 an ounce mark yesterday, down a full 1.25%. So we're about $100 off the recent high put in by gold not that long ago. West Texas Intermediate crude went out just under $72 a barrel in the high 71.90s. Some of our favorite commodities here, such as lumber, which we've been tracking since the pandemic. Lumber's continued to see, a pretty good decline across the board, and this week is no exception to that, as lumber has stayed, pretty consistent. Live cattle, speaking of consistency, right around 165 per 100 pounds, and elsewhere in the commodity complex, we've seen prices continue to basically moderate from where we are. Nothing too exciting that's jumped out this week. And really, I'd say gold's been the main story. Something that we'll start paying a little bit more attention to is old Dr. Copper. Copper should prove constructive. We're about 369 right now, which that's right in the midpoint of its chart, as that may be a good canary in the coal mine, whether or not we look towards a global or U.S. recession versus an expansion in the global economy. And boy, do we have a great show for you today. We'll talk more default news. We'll talk more financial planning items for you, and a focus on the energy sector is coming up next. Keep listening to Financial Fridays, brought to you by Alliant Wealth Management, right here on this station. We will return after a word from our sponsors.
What do you want to do when you grow up? When we were young, it's a question we were often asked. As we get older, our passions become clearer, our pursuits become careers, and if we're diligent, we begin to plan for the life we want to live. That's why at Ameriprise Financial, we ask, what's most important to you? Starting with our Confident Retirement approach, your Ameriprise Financial Advisor will ask questions that will help you arrive at a customized plan that can help you realize your goals today, tomorrow, and throughout retirement. With the right financial advisor, life can be brilliant. Call Alliant Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, Inc., today at 270-684-8424. That's 270-684-8424. Office is located at 2708 New Hartford Road in Owensboro, Kentucky. The Confident Retirement approach is not a guarantee of future financial results. Investment advisory products and services are made available through Ameriprise Financial Services, Inc., a registered investment advisor.
Hello and welcome back to Financial Fridays, brought to you by Alliant Wealth Management. I'm your host, Drew Watson, and this is the Investment Spotlight section of our show, where we take a deeper dive in specific sectors or stocks. As always, there is no solicitation to buy or sell any stocks, just general information that you might use as a good takeaway from the show. So today we're going to take a deeper dive, courtesy of Ameriprise's IRG Investment Group, and look at what we could say the first quarter 2023 energy earnings led us to believe. And definitely a lot of investment houses do follow energy, as it's a huge part of the economy. And midweek, just to put things in perspective, benchmark West Texas Intermediate oil price was around $71 a barrel, and that's down about 11% from January 1st. Now, also, a lot of people do remain constructive on the commodity due to potentially strengthening Chinese oil demand in the second half of 2023, plus sluggish supply growth due to an underinvestment in finding new oil reserves since 2014. So that, we're going on a decade where the search for black gold, as Jed Clampett would say, or Texas tea, may be putting us in an area where there is less and less or tighter supply. So, of course, a U.S. and or a global recession could send oil prices lower, but that's kind of where we are as of May 19th, 2023. Now, during the earnings season, the most positive commentary came from the oilfield services sector, especially from companies with leverage to the offshore and international markets. There was a consistent message of rising demand and strengthening backlogs. Specifically, there was a lot of positive commentary regarding the offshore market. With oil prices trading consistently above $70 a barrel for more than a year, there's a belief that oil companies are increasingly confident in pursuing large-scale offshore drilling projects, which often involve large capital spending commitments. Several companies in the offshore sector expect significant order and backlog growth over the next few years. Note that the oil industry has underinvested in finding new oil and gas reserves, as I said, since 2014, and that could be an important catalyst for this increased offshore drilling for the next year to 2 years. Also, if you look at E&P companies, that's exploration and production, those returns could remain attractive, and the first quarter results of this year were mostly in line to better than expected. Cash flow generation and variable dividends were mostly down quarter over quarter and year over year, primarily due to lower oil and natural gas prices and higher oil field services cost. Nonetheless, dividend yields remain attractive, as most analysts view, with annualized second quarter 2023 fixed plus variable dividend yields around 6% for some companies. Many E&Ps have adopted fixed plus variable dividend structures in the last 2 years, which I believe makes the sector significantly more attractive for investors. Historically, exploration and production companies spent as much as 120% of cash flow to fund drilling. That's the reason why it's more than 100 is you had some debt in there, and with little regard for shareholder returns. Typically, the highest spending occurred in times of high commodity prices and elevated oil field service costs, resulting in low returns on capital through the cycle. Also, these companies were historically focused on production growth rather than shareholder returns, resulting in high U.S. oil production that in some cases oversupplied the global oil markets and drove down prices. The change in E&P management philosophy has been significant in the last 1 to 2 years. Many exploration and production companies are paying out 50% to 70% of their free cash flow in variable dividends while growing production minimally. Investors are still getting comfortable with these new structures, and in my view, there's a belief the sector is now significantly more attractive to investors and could result in a multiple expansion over the next 12 months. Finally, if oil prices do strengthen over the next 6 to 12 months, cash flow and variable dividends should rise, providing additional catalysts for the sector. Keep listening to Financial Fridays right here on this station, and we'll be back with our financial planning segment in 60 seconds.
When today is unpredictable, you need sound advice and strong support to help you stay focused on your long-term financial goals for tomorrow. Ameriprise has been guiding clients through challenging times for over 125 years. You can take comfort in working with an advisor who's backed by that strong experience and who's there to guide you with personalized, goal-based financial advice. Together, you and your Ameriprise advisor can plan your future while navigating your now. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, LLC, today at 270-684-8424. That's 270-684-8424. Offices located at 2708 New Hartford Road in Owensboro, Kentucky.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and this is the financial planning segment of our show where we're going to take a deeper dive with your financial planning topics. Today, we're going to explore what might happen at the end of 2025 with income taxes and where we might be back to just in a few short years. So, in case you're wondering, the tax cuts that went into effect, I think, in 2018, if nothing happens in Washington and no one can agree on anything, are set to automatically expire at the end of 2025. Now, the reason why we're exploring this topic is the fact that the expiration of these tax cuts may be more of a, I don't want to say certainty, but may have a higher probability of happening because it doesn't appear anything can get done and no agreements can be reached in the U.S. Congress. Specifically speaking, I think, some people may claim the keystone of what Trump has done as president was this tax cut program. And most notably, it did reduce some of the tax brackets. It reduced the number of tax brackets. It put in, reductions on what people could use as itemized deductions. And just from a cursory look, if we did, in fact, go back to the way it used to be, obviously there would probably be some winners. And anytime there's winners, that means there has to be losers. Because this radio show is not T-ball league where everybody gets a trophy. In economics, anytime there is a loser, there's a winner. And anytime there's a winner, there is a loser. And as Milton Friedman famously said, there is no such thing as a free lunch. But a couple of things that would jump out is currently, if you have children under the age of 17, you get a pretty healthy tax credit. I would say potential winners would be, households that have kids that are still qualifying as dependents, but over the age of 16. In that, if you remember, we used to every person had an exemption of somewhere $2,800 to $4,000. That was a personal exemption. And if you have a lot of kids 17 to say 24 in college that you can legitimately qualify as a dependent, you would get a dependency exemption for them along with yourself, and if you're married, your spouse. Whereas there is no such thing as a dependency exemption anymore. If you're a high income earner or own a lot of properties, to go along with this scenario, you would also be able to deduct, again, your full amount of your state and local taxes, sometimes referred to as the SALT deduction, SALT, state and local taxes. So, for example, if you're in Kentucky and let's say you make $500,000 a year, you have a big house on a beautiful avenue in a town with lots of dogwoods and azaleas, and let's say your income tax from the state of Kentucky is about $25,000. Let's say your community that you live on the beautiful avenue has a punitive net profit or payroll tax of another couple percent. That's another $10,000. And let's say your property taxes on your beautiful home and cars are another $10,000. So in that scenario, that's about $45,000 in state and local taxes that you pay that currently you're only able to itemize $10,000. So right off the bat, your itemized deductions would increase by about $35,000 in that scenario. Now, here's the dark side of returning to the tax cuts. Back in the old days, the highest marginal tax rate was 39.6%, and today it is 37%. But if you're listening to the program and you say, Drew, I'm not a big money man or big money woman, this may not hurt me. Well, if you can remember, currently we have a 10% tax bracket on the lowest amount of money made, then 12, and then 22, and then 24. Back in the old days, we had a 15% bracket, and let's say that took the place of the 12%. You may think, well, that's not bad, that's just 3%. But essentially, that's a 25% increase in what you'd have to pay on that marginal dollar in that tax bracket. But more importantly, you jump right up to 28%. And from going from 15 to 28 is almost a 100% increase in liability. And I think when these tax cuts went into effect and people discussed that this is really going to help the middle class, what could be read into that is, by reducing that 28% bracket and 15% bracket to 24, 22, and 12, that's where there's been a lot of tax savings generated. Now, taxes, kind of like real estate, are all local, meaning that it all depends on your specific situation. So to decide whether or not you would be a net winner, a net loser, or perhaps break even, it's going to take an analysis of your specific situation to know where you stand. But generally speaking, if you're kind of a retiree and your house is paid off, you don't have much state and local taxes, and you are not itemizing anyway, chances are you'll probably could be paying more potentially if we go back to the way taxes were. A couple things that haven't been discussed because really they're important but are often overlooked by politicians and most news people. One, the taxability of Social Security never changed. So Reagan, I think back in 82, was the first person to put in and make taxes apply to a certain percentage of Social Security benefits. And the figures that they used back in 82, guess what? Here's a shocker, are still the figures in play today. So there's been no inflation adjustments. Now, even if you had a 2% inflation rate straight line from 1982 to 2022, that's 40 years, those brackets should have doubled and then some, but they have stayed steadfast. So this is how I think, in my mind, the government can get more in its coffers, is they use little-known tax law to basically impugn most people that have planned for retirement. So that's number one. That has never changed, and that wouldn't change if we went back to the way taxes were. The other thing that hasn't been discussed much is there didn't used to be an ACA subsidy, or what they call now the net investment income tax, of 3.8%. So if you're a single person, once you're over $200,000, you have to pay that in addition to your top rate. If you're married filing jointly, anything over the $250,000 mark, that comes in. So if in that $500,000 married filing joint example, currently that rate is the 37 plus the 3.8, which is 40.8, which is higher than the 39.6. So even though our tax situation may change, so to speak, what we don't know is what exactly will transpire with some of those very important but unmentioned parts of the tax code. And my experience, doing this for 30 years, is it's what's unmentioned and important that usually comes back and bites you on the rear end. You're listening to Financial Fridays, brought to you by Align Wealth Management. We'll be back in 60 seconds after a word from our sponsors.
What do you want to do when you grow up? When we were young, it's a question we were often asked. As we get older, our passions become clearer, our pursuits become careers, and if we're diligent, we begin to plan for the life we want to live. That's why at Ameriprise Financial, we ask, what's most important to you? Starting with our confident retirement approach, your Ameriprise Financial Advisor will ask questions that will help you arrive at a customized plan that can help you realize your goals today, tomorrow, and throughout retirement. With the right financial advisor, life can be brilliant. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, Inc., today at 270-684-8424. That's 270-684-8424. Office is located at 2708 New Hartford Road in Owensboro, Kentucky. The Confident Retirement Approach is not a guarantee of future financial results. Investment advisory products and services are made available through Ameriprise Financial Services, Inc., a registered investment advisor.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and this is the email bag segment of the show where we answer your questions with regards to financial matters. As a reminder, you can always email me at william.a.watson at ampf.com, and we will get to your questions. This week, the questions have come in regarding what happens if the U.S. defaults on its debt and can't pay its bills. Well, this has been a point of contention, unfortunately, across many years here in the last decade and a half, as our politicians, don't focus on real issues, in my opinion, and kind of try to, I guess, satisfy the electorate with bells and whistles instead of looking at a long-term way to govern the country. But be that as it may, the U.S. does have a pretty hard and fast, firm set of, I would say, flow of funds responsibilities. And first and foremost, interest on the debt gets paid, then government benefits. So I know we've had a lot of questions regarding whether or not Social Security payments will be stopped, people on disability not getting checks, etc. But generally, that is just behind the pole position payment operator of interest on the debt. Now, with that said, the people at the tail end of the dog on collecting money from the federal government, kind of last, would be vendors to the federal government. So, I mean, if you're operating a business where you're a vendor at one of the Army bases or government building, any type of government facility, you would probably be on the hind teat, as they used to say in farming language, on getting any money out of the government. But as we saw when the U.S. government debt was downgraded several years ago from AAA rated to AA, I think that was by Moody's or S&P, really after kind of the headlines had passed, there wasn't much of an impact on U.S. government debt. The market essentially still sees it as a global risk-free asset. As a guy I used to know, I always said, today's headlines, it's tomorrow's kitty litter. But generally, there was a lot of hubbub about that. But at the end of the day, there really wasn't much of anything that went on with regards to meaningful or material deterioration in the quality of U.S. treasuries. With that said, if the U.S. were to go into an outright default, which is a kind of low probability but high impact scenario where for whatever reason they refuse to pay their creditors, there would be, at least temporarily, some outcomes that I don't think any financial forecaster could kind of forthrightly totally understand. Because typically when countries do that, the borrowing cost that they must incur go up rather dramatically. So some of these, I think most recently, call them Latin American countries and or Eastern European countries that have potentially defaulted, have seen their borrowing costs triple overnight. Now, that's not a permanent condition, but it does, bring things into, what I would say, stark contrast. So if you kind of bear with me, in a worst case scenario, if the U.S. defaulted, and there again, this is a worst case, not saying this is even what I think would happen, is you could see borrowing costs potentially in the U.S. go up. Now that would, perversely enough, send more investors in to buy U.S. denominated government bills, because at the end of the day, even after the U.S. was downgraded, the world investment community still saw it as the safest place to invest, or, and a long-time investment analogy is it was the cleanest dirty shirt in the laundry basket. And with a mass entry of buyers of U.S. debt, rates would turn around and go lower. Now, the other thing that would happen if our rates were to go up exponentially, the U.S. dollar would strengthen almost overnight against most major currencies. So, for example, against the Eurozone or the British pound, where the dollar's a little bit weaker now. So what that means is if you fly into London and give them a $100 bill, you get back less than 100 pounds. If you fly into Paris and give them a $100 bill, they give you back less than 100 euros. If rates were to go up and were to strengthen like they did last year, temporarily at least, if not longer, exchange rates would see a huge change where when you flew into London and gave them $100 US dollars, you would get back more than 100 British pounds. Or when you flew into Paris or somewhere on the continent that's in the Eurozone, you would give them a $100 bill and get back more than 100 euros. That is the extent of how we could see a default playing out with some unintended consequences. Now, there's no doubt there would be casualties and collateral damage across the financial landscape that no one could accurately predict with exact certitude how that would take place. But certainly we could see a number of potential opportunities. But keep in mind that if U.S. rates were to skyrocket, more than likely you would see a number of investors pile into U.S. bonds to take advantage of that opportunity, as they would surely see it, although being temporary. But it would be an opportunity nonetheless for them to make money that they would think in a fairly riskless asset. So that's what would potentially happen. Now, would there be panic and would there be kind of crazy things happen? More than likely, yes. And I would say, a thing to keep an eye on more than anything in this situation. So let's go back to what's been the disaster of this year has been the banking problem. If interest rates were to go up that much, the value of the bonds on the bank's balance sheets, U.S. government bonds, would go down even more than what they did to create the problems at Silicon Valley Bank and New York Community Bank and all these banks that have had problems. And that would more than likely, as a kind of, I think, follow-along problem, it could create definitely a potential banking crisis here in the U.S. That a lot of people are hoping has been, is under control or has been slightly averted. There again, that is probably a secondary effect or a knock-on effect, as they say in economics, of what could happen as a result of a default, is you have some more banks.
This program has been paid for by Rainmaker Incorporated.
This is WOMI Owensboro, 99.1 FM and 1490 AM. Translator W256CF, a Town Square media station.
He's asking for a lot more help fending off Russia's invasion. I'm Dave Anthony, Fox News. Ukraine's President Volodymyr Zelensky went to Saudi Arabia today, meeting with Arab leaders.
A noble call to all of you to help protect our people, including Ukrainian Muslim community.
The Saudi Arabian Crown Prince offering to mediate talks trying to end the war. Now, Sunday, Zelensky will go to Japan to meet with President Biden and other world leaders at the G7 summit. They pledged to help Ukraine as long as it takes and are also working on
what a senior White House official calls a de-risking from China. Careful not to use the word decoupling. The Chinese very upset, saying that the G7 needs to stop hyping the China threat. The fact is, though, China has been helping the Russian economy, buying their products, as well as companies in China giving items to Russia that could be used in military equipment.
Fox Business Network's Edward Lawrence at the summit. The U.S. military is backing off a claim earlier this month that a drone strike in Syria killed a senior al-Qaeda leader. The family of the man hit by a missile says he wasn't part of a terror group, just tending to his sheep. There was a shooting at a manufacturing plant in Ohio.
It looks like a targeted attack against one male victim who has been pronounced deceased here at the scene.
Marine Police Sergeant Andrew Parrish says the gunman also wounded somebody else, then shot himself. Both are hospitalized. In New Mexico, they've released body cam footage from Monday's mass shooting in Farmington. That's when police killed the 18-year-old gunman, Bo Wilson, who was on a shooting spree, firing at random, walking down a street.
Now, Wilson was a high school senior just one day away from graduating. On a neighbor's Ring video, you could hear him yelling, "Come kill me. Police do not have a motive," but they found a note in his pocket saying, "If you're reading this, I'm the end of the chapter."
Fox's William Lajeunesse. 3 women were killed. A 97-year-old and her 73-year-old daughter. A 79-year-old also died. 6 others wounded. America's listening to Fox News.
Maxwell, she was scratching and losing some hair. My vet, she says, "Oh, he must be allergic to chicken." Another vet said, "Eat the drain." Third vet said, "It's the weather." Then somebody said, DINOVITE.com. It took 2 weeks, and the dog stopped itching. The hair stopped falling out. The Dinovite is a big part of Maxwell's diet.
You get some Dinovite, how happy your dog will be. DINOVITE.com.
Newsmax is conducting an urgent poll asking if Tucker Carlson should be on Newsmax with a primetime show. Vote in the Newsmax poll. Let us know you want Tucker on air. Text RESPOND to 39747. That's RESPOND to 39747, and we'll send you the poll. Let your voice be heard. Text the word RESPOND to 39747 and make the switch to Newsmax. Millions are watching. Texting enrolls for automated text messages. Message and data rates may apply.
Stocks a little mixed on Wall Street so far today. The Dow is up 43 points. The S&P 500 is gaining 9, but the Nasdaq is now losing 1. The price of oil is up almost $1, back over $72 a barrel, while gas inches up a bit. AAA's national average for regular $3.54 a gallon. That, though, same price we were paying a week ago, 14 cents less than a month ago. Disney has a new issue in Florida, ditching plans to build an office complex that would have brought 2,000 jobs from California. Some workers had already moved to Florida in advance.
It follows Disney and Governor Ron DeSantis sparring over DeSantis signing legislation banning certain school instruction about sexual orientation and gender identity. Disney filing a First Amendment lawsuit against the governor and other officials. The governor ending Disney's self-governing district in retaliation, and Disney CEO calling the governor anti-business. A rep for DeSantis, who is expected to launch a 2024 presidential run, calls the cancellation unsurprising, citing what they call Disney's financial straits, falling market cap, and declining stock price. Kristen Goodwin, Fox News.
They played a lot of hockey last night in Raleigh, North Carolina. The opening game of the NHL Eastern Conference Final went to overtime, and then another, and then another, and yet another.
Tkachuk with a shot. He scores! Matthew Tkachuk!
He finally won it for Florida with about 12 seconds left in the 4th OT on TNT at almost 2 o'clock in the morning. The Panthers beat the Carolina Hurricanes 3-2. It was the 6th longest NHL game ever. Now, in the NBA playoffs, the Denver Nuggets beat the LA Lakers again, 108-103, now leading 2-0 in the Western Conference Finals. In Rochester, New York, this morning they finished round 1 of the PGA Championship. Round 2 is underway. Bryson DeChambeau is the leader now at 4 under par. I'm Dave Anthony. This is Fox News.
Save big money on your next project. Now at Menards. Update your home with low-maintenance vinyl windows from Jeld-Wen. They're durable, energy efficient, and are low maintenance. Menards carries over 100 different size and style options in stock, ready to take home today. Save big on Jeld-Wen windows now at Menards. And don't forget to check out our flyer on Menards.com for all the great deals happening now.
Save big money at Menards.